Great conversation with Lord O'Neill and Jemana there. Let's see if we can sort of move the conversation along, transforming global infrastructure, the capital, energy transition, and emerging markets. We've lost one of our guests. He sends his apologies, Ricard Boada from Brookfield. But I'm delighted to say that we have KKR with us this morning, Julian Barratt-Due. Just think about the infrastructure business they've been in since 2008, $700 billion assets under management. We have Joseph on the end, Joseph Lassen, co-founder and CFO of Green Flare. They convert flare into energy and then funnel that into the land of crypto. Mohammed Shaikley here on my right-hand side, Chief Investment Officer at Nowais Investments, a true conglomerate since 1979, if I'm not wrong. Okay, let's give you some facts and data because that's what everything is driven by in terms of investment. The world needs $94 trillion worth of investment in infrastructure by 2040. We're on track for $79 trillion. That is a $15 trillion gap. These are World Bank numbers. Emerging markets, Asia needs $1.7 trillion by 2030, transport, power, water, digital, and Africa needs, on average, every year, 130 to 170 billion. Usually we get about 80 billion, so again, there are gaps all the way along here. Gentlemen, good to see you all this morning. Thank you for taking the time out of your schedules. Let's talk about the gap and how we potentially can close that. Where are the most dominant liquidity providers in that? And if we can kick that off, Julian, first of all with you, because obviously KKR has a very unique position, not just in the region, but globally. Who closes that gap? How do we do it? Good morning.
Yeah, good morning. Thank you very much. I think infrastructure as an asset class has been a tremendous growth story really over the last decade plus. And if you think about our business, we've been around for 50 years. Next year is our anniversary at KKR. We started the infrastructure strategy in 2008, and today we manage close to about 100 billion of assets under management. So it has become a larger part of institutional managers' allocation. And then you're also seeing now with the emergence of evergreen structures and retail products, that retail investors and high net worth individuals can more easily access these type of illiquid investments and structures to a much larger extent than previously, opening up the investing universe to a broader set of capital pools as well. I think from an investing point of view, what's interesting about infrastructure is just the size of the funding gap that you mentioned and translating that into what that means in terms of asset creation. So some other asset classes that are more mature, most deal activity and transactions are really about asset trades, whereas here there's an opportunity to really invest behind greenfield capex projects and the creation of new assets as well.
And then in terms of sort of the idiosyncrasies of the gaps, Joseph, you work in a slightly different world. You're very Africa focused. You're very much involved in gas capturing, turning that into energy. So for this room, this is about really at the heart of emerging markets. How difficult is that in terms of raising capital? Because I just went through the numbers. So just give the audience a bit of a perspective. And I've got no problem raising capital at the moment. I've got people queuing up at the door. Or how tough is it?
Yeah, thank you. So to give some background, Green Flare is an energy and digital infrastructure company. We're building the largest flare gas to digital infrastructure deployment in the global south currently, focused on Nigeria, 3 initial sites. As far as the capital idiosyncrasies, I think what we see often is that there is typically interest from one segment of capital, which is typically private. I think we need to look at the development of public-private partnerships and very strategic partnerships of that nature, where you have large financing corporations like AFC and DFIs coming in with private capital partners to fill that infrastructure gap. One of the things that Manus said earlier is we see a dearth of capital in the emerging markets, specifically in Africa, let's say $100 billion a year. In Nigeria specifically, where we're deploying our first sites, we see data center infrastructure being about a $200 billion investment opportunity. And this is just onshore flare gas. That doesn't include hydro, that doesn't include solar or any other types of alternative energy production. So it's a real problem. I think that those strategic partnerships and institutional underwriting in those geographies is going to be essential to close that gap. Thank you.
Mohammed, good morning. You know, you come from a deal-making environment in tougher times, good times. You know, you've had a breadth of experience. When you hear those kind of numbers as a deal maker, do you salivate, or do you go, actually, Manus, this sort of quantifies the risk appetite and the challenges perhaps in emerging markets?
Yeah, so look, I mean, so one of the companies that we established at Nowais is a company called Amia Power, which is a power generation company that's focused on Africa, Middle East, and Asia. And as far as power generation, I think that the construct is a bit different than than other types of business operations. So, for example, you have long-term take-or-pay PPA power purchase agreements with stable off-takers, dollarized, usually backed by sovereign guarantees. So we have not faced, and I think that the typical players in this space understand the risk profile very well, and we haven't really encountered as many obstacles in terms of raising capital. And obviously, we're very happy to put our own capital to use in this, but we were also able to raise from SoftBank Group, which is a major, international conglomerate that hasn't had any much past exposure on the continent.
You would also say, though, from your perspective, the relationship with the multilateral agencies is incredibly important. Can you just flesh that out for us?
Yeah, definitely. So multilateral agencies are basically designed to mobilize debt capital into these challenging markets, and it really is, a fundamental part of the equation. Essentially, they provide, first of all, a lot of extra diligence on projects. Secondly, they can support in terms of negotiations with the host governments, because sometimes it's difficult to get a proper bankable power purchase agreement from some of these host countries, or to convince them to do certain things. They're sometimes a bit rigid, but DFIs are really valuable in terms of being able to get a bankable project over the line. And obviously, I mean, having financing at such attractive terms then allows the project to be financially, attractive. And in extreme cases, they also help in terms of soft power. So we had a case with one government where during COVID, they didn't want to pay on the tariff, power purchase agreement. And so the likes of the IFC and other lenders had actually provided financing to a number of projects and told us, look, just, don't worry, we'll take care of this. And basically signaled to the government that if they ever wanted financing in the future, then they should just honor their contractual obligations. So they're definitely very important.
I'm just curious, Julian, friend or foe, the multilateral agencies for KKR, do you sort of embrace a relationship with multilateral agencies as Mohammed does, or how does KKR view them?
No, absolutely. And I mean, I think if you think about this region as an example, we have recently established a dedicated investing business here in the Middle East. General David Petraeus has been appointed chairman of the region. A large part of what we do here is also engaging very closely with those organizations, both, of course, from a commercial perspective, but also as capital partners, given the diversification agenda and the mandate that some of these entities have with respect to driving growth in the economy, which is really the investment theme that we're investing behind across multiple different capital pools in the region. So we engage with them very closely as well.
I mean, I can remember, I think we were just chatting in the green room before, I did live here in a different incarnation, and I can remember covering the KKR deal with ADNOC, and that was back, I think, in 2019. Is that how you approach the philosophy here in the region? Because you're building the office is growing, and that differentiating factor is we are not just a liquidity provider, but we are very much more deeply involved in the business that we provide liquidity to. Is that the fundamental differentiation factor for you, and is that how you're going to build the business here?
Yeah, I mean, we have multiple pools that we manage at KKR. Some of those are more active in that respect, where we're really partnering up with corporates, taking a hands-on role, get involved in driving value creation in the business. We can also be more of a passive investor as well in some of our more long-dated funds. I think really the strategy in this region, if you think about it, it's a fairly sizable market, 2.2 trillion of GDP across the GCC, GDP growth in the kind of 3 to 5% range, very attractive demographic trends, high population growth, and at the same time, you benefit from a dollar-pegged currency, very strong jurisdictional credit as well, and a welcoming attitude towards FDI. So if you look at all of those factors in combination, they are attractive in terms of providing tailwind for investment opportunities. We've been active, as you mentioned, since 2019 on the direct investing side. So the first deal was with ADNOC on the oil pipelines. We partnered again with ADNOC on the gas pipelines very recently. We've done a deal with Etihad, aircraft leasing transaction. Recently acquired a fertility clinics business here in the UAE through one of our portfolio companies. And then we partnered with Gulf Data Hub, a large data center platform headquartered here but operating across the region. So I think through those experiences, one, capital deployment has really accelerated for us in the region, so it makes sense to be local to really build out that opportunity. And we've gotten a good appreciation for what we can do here across different types of capital pools and asset classes.
And Joseph, then just within the context, you are running a business, but for this audience today, in terms of KKR's view of how they see the opportunity here, just give the audience perhaps a broader view. You spend a lot of time, I caught up with you, he was on the move, he was at home in London, you spend a lot of time in Africa. So just the context of where you're doing your business and maybe the opportunities that you see beyond the framework of what you're trying to do within your own organization.
Mm-hmm. Sure. Yeah, I think where we work in West Africa is quite a distinct geography, and there are very specific considerations that you have to give to the structural setup of a business in those regions. Specifically in Nigeria, one of the reasons that we're deploying significant capital and resources into that country is because of a stable regulatory space where we have cover from what's called the Petroleum Industry Act, which has survived 5 administrations in the country. So the fact that you have regulatory cover and you have the ability to enter into bankable PPAs under that framework is essential. If you can't underwrite the very specific pieces for the deployment of EPC, proper due diligence, DED, you will not be able to deploy projects in a way that large capital institutions and institutional partners will accept. This also goes for the DFIs. And so as you look at the very specific applications that we're building, you have to align the partners. So we work with the upstream, we work with the regulator, and we work with the government. The difficulty with that is obviously sometimes they will clash, and so you have to figure out how to align each person with the incentives. The regulatory and the law space really help with that. So as we look to expand, and my co-panelist here has said it well, is the distinct alignments that you have with the individual players in each country matter, and they're very specific to each one. So for us, that stability and framework is very important for what we do.
And then obviously, Mohammed, for you, if we look at the opportunity, you've laid out the proposition within EMEA, which is very much something which you've moved on from, as it were. But for the room, I mean, there's these headlines about infrastructure investment, whether it's in data centers, traditional infrastructure. We're trying to blend the two. Just give the audience a view of where you see the biggest opportunities regionally and the kind of things that are coming across your desk at the moment.
Yeah, I mean, I think that definitely, the EM growth story is certainly, very robust and continues to be so. Across the energy value chain, I would say that there are a tremendous amount of opportunities that we look at and occasionally have invested in. And I'm very much a believer, across the entire value chain, everything from power generation to to energy efficiency, let's say, all the way through to technology and data centers and things like that.
And then, Julian, if we just expand on that a little bit, I've returned here. There's new names in this world. There's G42. There's Multiply. There's any number of new mega names involved in the UAE's expansion, and likewise in Saudi Arabia. So, to what extent can you see a pool of deals to be done in the very, very near term? We've got, headline after headline of people coming here, raising capital, raising funds. Do we have enough deals and deal flow in the traditional area that you've played up until now? And is the future much more about perhaps the tech and the AI space?
Yeah, good question. I think if you look at how the market has evolved, there's certainly been a very meaningful increase in terms of sponsor-backed deal flow and M&A activity. So I think the numbers are around 3.5x increase over the last 5 years in terms of sponsor deals compared to the period before that. So it's on the right trend. I still believe that the market, is not as visibly transactional relative to if you're sitting in London or if you're sitting in New York. You have the benefit of constant pitches coming to your desk every day. I think the nature of deal origination is different here. As a result of that, we're probably not there at the moment where we're saying let's create a product that is specific to the region, but rather approach the market with a wide lens, being able to deploy into core infrastructure core plus, private equity, real estate, and credit, rather than creating a pool of capital that is expected to do 10 infrastructure deals over the next 3 to 4 years. I think for that strategy, the market is probably not mature yet, but it is moving in the right direction. I think just on the point you mentioned around corporate partnerships, that is frankly a key part of how we originate in this market. It is building those relationships with businesses, families, owners of assets, corporates that have an asset and they'd like to take it to the next level and are looking for a partner. So I think the Gulf Data Hub transaction that we announced earlier this year is a case in point example where effectively the founder was looking for someone that could support the growth of that company. KKR on a global basis have 5 data center platforms, about 12 gigawatts of total capacity, including our pipeline. So through that, we built a very strong relationship base and connectivity with the hyperscale customers. That IP is incredibly synergistic when you merge it in with the local business and the local capabilities in GDH. So I think those are the type of situations where we can add a lot of value and we're spending a lot of time around.
And then just expand on that from your perspective. I mean, if that's the KKR perspective, then from somebody that needs capital, wants capital, how does that landscape look for you in your region?
Yeah, so for us, the capital landscape is much different. There is a significant dearth of capital in Africa generally, and I think you mentioned the statistics before. There is a separation between very high quality projects, which will get funded, and the multilateral institutions, the large financing corporations, and private capital will come into those types of deals. Typically, those are later stage with higher cash flows, very strong balance sheets, and more established players. As you look at, let's say, startups or emerging companies, growth equity, that capital is lacking, honestly. And I think that we need the institutional capital providers to start looking at deployments in these specific regions in order to earn better returns. So for example, if you think about what won't change over the next 10 years, people will need more compute and they will want it cheaper. How do you get cheaper compute? Cheaper energy. So for us, we're looking at this as an energy arbitrage over the next decade to secure the cheapest energy, and most of that is in the global south. So as you look at the highest returns that are going to be available to institutional capital providers, it's in these geographies. So I think for me, I see a lot of work to be done from the financial institutions to start seeing this thesis. And a lot of the really smart capital is starting to move in that direction in emerging markets, in the global south, in West Africa specifically. And I think eventually we'll see a formalization of that capital deployment in order to meet that demand over the next decade. We see demographic backgrounds, very young populations, digitally native populations in all of these places. They will be using more compute than any of the previous generations or for the last decade. So I think there's a lot of work to be done in that space.
Do you think the institutions, it's interesting, you get a lot of institutions coming here, you see them especially in the finer weather rather than in the midst of July or August, coming here. There's still a gap in terms of how business is done here, perhaps how to raise capital here. The length of time that it takes to do a deal here, I think, is fundamentally different maybe to London or New York. In your region, Joseph, do you think that CEOs, CFOs need to do more of an education job, and do institutions need to go up the curve a little bit more aggressively in regards to Africa, West Africa, relative to other geographies?
It's a case of both. So I think that CEOs in the region need to educate institutional capital providers of the regulatory changes or the landscapes in which they're operating. Because a lot of the people that I talk to, they say, we just don't do that geography. Okay, that's fine. But what I think should be done is a little bit of work to understand it before you reject it. So that's the first thing, and the education is a piece of that. On the institutional capital side, I think what, we've seen a lot of emerging market funds being raised recently for these geographies, and they are starting to meet in the middle, and that's how partnerships are done. So I think it's a little bit of both, actually, to answer your question.
I mean, this is probably music to your ears, because if there is a hesitancy in global liquidity providers in understanding the risk in geographies like, for example, in West Africa, you have a slightly different proclivity for risk at Nowais, don't you? So is that kind of music to your ears? Those are the opportunities.
No, absolutely. I mean, I agree 100% with what he's saying. And look, I mean, I think that the thesis behind, the demand that exists can't be ignored. The continent has, I think, 1.6 billion people. Internet penetration in 2015 was about 24%, and that's expected to go up to 80% by 2030. So, I agree that, across the board, there's going to be a lot of inherent demand and a lot of required, investment that goes into the continent, and it really cannot be ignored.
And if I said to you, I spent some time with some of the big AI providers here, or the aspirational AI providers here. We're obviously building one of the biggest campuses outside of the United States of America. In regards to AI, there's access to sort of the top level of chips. How does KKR look at that tech space here? Not just here, but also in Saudi Arabia as well. I mean, there was that famous trip. It was the first day that I joined the National. It was the 12th of May. I was stuck outside the Ritz with nothing more than Irish charm, a passport, and a hope to get inside, because my stamp hadn't come through. How do you look at those opportunities, those technology, those AI? Because it is a revolution of capital, and the Mag 7 have promised phenomenal capex on this, and there's phenomenal capex commitments here. So for KKR, how do you look at that?
Yeah, absolutely. I think digital infrastructure is certainly one of our high conviction themes. As I mentioned before, we have 5 data center platforms around the world, so we have a good sense of kind of relative attractiveness of markets. We made the investment here in GDH really because of the features that a hyperscaler get from deploying capacity in the GCC. If you think about the main barriers to really, or bottlenecks rather, to elevate data centers in FLAP-D markets or North America, it's really access to land and power, there's no shortage of that here. You also have much cheaper electricity costs, which create a comparative cost advantage in terms of TCO and operating these data centers from a hyperscaler point of view. So we're excited about the market opportunity set in the region. I do think that it's also just generally a sector where you need to be very disciplined in terms of how you deploy capital. So the way that we are creating our portfolio on a global basis is being very focused on customer selection. The customers for us tend to be the large hyperscale companies that have very strong balance sheet, very well capitalized, very strong free cash flow, high counterparty credit. And we deploy capital in terms of building data centers once we have a signed contract, long-term lease, triple net usually with pass-through of inflation and power costs with those customers. So I think that's a key one, avoiding investing on a speculative basis without having secured offtake. And I think the second thing is just location is important as well. So building data centers close to digital hubs, population clusters, eyeballs, where you have a more, let's say, diversified use case for that infrastructure relative to, for example, just building AI training large-scale facilities in fairly remote areas. That to us feels a little bit more risky just with respect to the longevity of the business model.
Mohammed, can you just build on this a little bit? It's the second time somebody's discussed nuclear fusion with me, so I'm going up the curve quite vertiginously in terms of understanding what nuclear fusion is and the possibilities. But if we build on the sources of power, if we build on that renewable energy theme, how important is that? Because we're at some kind of a tipping point, whether it's to be proven or not in AI. I think that is yet to be decided in terms of the capital deployed. We're all banking a lot. All of your pensions are so wrapped up in AI. Go and check. I did. So just talk to me about nuclear fusion.
Look, so I think that one key thing to keep in mind is that when we talk about Africa, just generally, right, you have a key issue with baseload power, right? So even if you're able to, right now, I mean, BESS and solar have completely changed the game because you can essentially have, localized energy sources where you're able to, have a mini grid or a microgrid, and it's really kind of changed the sector quite dramatically. But I think that, the new advents of technology are only going to further enhance and augment, let's say, the potential, the realizable potential. And really, the themes that exist today around, energy generation. These are really global themes that need to be addressed. Honestly, I don't know as much about, fusion. I know that fusion is something that is at the forefront. There's a company called Commonwealth Fusion out of MIT that was founded at MIT. They've raised like $3 billion. I think that they may be onto something. Google signed a PPA with them. What I think is much more interesting are SMRs, or small modular reactors. So SMRs work on fission, and basically SMRs are, so nuclear power plants have the advantages of providing baseload power, being clean, and essentially having high energy density, which means you need a little bit of fuel in order to produce a lot of power. And there are, I think, 74 companies today that are undertaking the licensing process for SMRs. Then the advantage of an SMR is that, as opposed to a big reactor, which are many hundreds of megawatts, SMRs are essentially anywhere between, they could be 1 megawatt up to like hundreds. And the nice thing is they're also modular, and what you could do is you could connect them to a you could connect it to the grid. You could put them on a ship. You could put them on an offshore mining installation. You could put them on a data center. So really, there are a lot of use cases for them, and I think particularly when you look in the context of Africa, where you don't really have a lot of grids throughout the country, and that's a major limitation. It will be transformative.
And Joseph, I'll give you the closing comment to you. You're nodding along there in terms of what Mohammed is saying in regards to perhaps the smaller solution to the grander idea. Within the opportunity set for you, when you hear that conversation, what does that say to you?
Yeah, I think what Mohammed has said is exactly correct. The base infrastructure in these countries is not functional some of the time, most of the time in some cases. And so if we can start deploying captive power solutions in smaller batches across the country or across the region, that is going to serve many people who wouldn't have electricity even for the next 50 years. So for example, on our flare gas sites, we distribute part of our power generation to local communities, build out a mini grid, and we can supplement the revenue that we don't generate, in some cases, from those mini-grids with our, let's say, Bitcoin mining facilities. And that means that we're giving power in a captive way to people that wouldn't be able to connect to a grid for the next decade, 2 decades, 3 decades. And so these miniature solutions not only have a commercial application, which is highly profitable, it also has a social application, which is incredibly important. And so I think we see kind of the micro and the macro being equally as important and both commercially viable.
Ladies and gentlemen, that was your Transforming Global Infrastructure Capital Energy Transition. Gentlemen, thank you so much for joining me. Joseph Lassen, co-founder and CFO of Greenflare, Mohammed Shaikley, Chief Investment Officer at Nowais, and Julian Barratt-Due, Managing Director at KKR. Thank you so much.